Good afternoon, everybody. You're all very welcome to this afternoon's webinar, an independent assessment of supports for business. And I'm delighted that we're joined this afternoon by Tony Harney and the team of Harney, Nolan Chartered Accountants. So how the session will work, Tony will take us through the first part of the presentation. If you've got any questions or if you want to comment at any stage throughout, please use the Q&A facility or the chat function on your screens, and we'll be able to address those questions and that at the end. So for now, sit back and enjoy the webinar. Tony, I'll hand it over to you.
Okay, thank you, Brian, and welcome, and thank you for joining us this afternoon. I'm going to talk about various government supports in this COVID crisis. Government, I suppose, has been fairly proactive. There's a lot of stuff out there. We have tried to keep our clients abreast of the various supports. Behind that, there's a huge amount of information on gov.ie, on revenue, on citizen information, a lot out there. But hopefully in this webinar, we'll be able to pull it together for you and give you a sense of what you're perhaps missing out on, or the reassurance that you're not missing out on anything. Even in that sense, hopefully you'll get something out of it. I'm going to talk about the various support in terms of grants and money directly into your pocket, loans, how revenue plays into this, and other supports. The first one I'm going to talk about is the temporary wage support scheme. It may be a little bit late in the day to be telling you about this one. This is the big beast. This is the one that has kept small businesses, many small businesses alive through the last number of weeks, and now thankfully has been extended for a further 10 weeks. It's going to run for 22 weeks in all, out to the end of August. I'm not aware, or I'll put it another way, I believe there are no new eligibility criteria. So if you're eligible for the first 12 weeks, you continue to be eligible for the remaining weeks out to the end of August. I have some clients a little bit concerned that some clients have issues around just stuff that's very simple for those accountants in terms of what's the main criterion. The main criterion is measure your turnover in Q2 of 2019 and your likely turnover in Q2 of 2020, and if it's likely to be 25% down, that's the main objective measured criterion. I have clients who find that simple principle a little bit hard to grasp. I have clients who think, well, we're back now, we're doing okay, and maybe at a conscience level, maybe we don't need this, and maybe on the basis that they were working remotely or they weren't working at all and now they're back, that maybe they're no longer entitled to this. To me, it's much simpler than that. Did you qualify based on the objective measures? If you did, you didn't qualify. The last item I have there is, will it be taxed? In principle, it's taxable. In practice, it might be politically not very expedient to tax it across the mass. Don't quote me on this, but my guess is that it won't be taxed. So moving on from that, which I call the big beast, there's a thing called the Restart Grant available through your county council. I imagine it's intended for the kind of costs you'll come up against when you want to reopen your premises and you have to put in COVID type stuff around, in our case, it's around screening and signage and stuff, all that kind of stuff. There'll be lots more of that. It's effectively a refund of the rates you paid to the local authority in 2019. It's subject, if you're entitled, you get a minimum of 2,000. If you're entitled, you get a maximum of 10,000. So put simply, if you paid rates last year of 1,500, you will get 2,000. If you paid rates last year of 5,000, you will get 5,000. And if you paid rates last year of 15,000, you will get the max of 10,000. It's a little bit nuanced. It's in the context of the government wanting to throw money rather than hold back. So there will be scenarios where perhaps you're rateable but didn't actually pay your rates. You can put your hand out for this. There are scenarios where perhaps your landlord paid the rates and built it into your rent. Again, you can put your hand out for this. So it's it's more nuanced than just did you pay your rates last year. You claim it by there's an online claim form with your relevant council, and the guys in the council in the Leo office tell me that there's been a far lower take-up on this than they would have expected, and not only that, but of those who did claim, massive amount of errors in the claim form. So I suppose the online claim form, fill it out properly or don't fill it out. Like if there's any little flaws, it'll hold it up. So they talk about a 55% rejection just based on simple little errors. It should be a really easy form to complete. Again, we're finding that people have having some difficulties around what's basic common sense to accountants, like definitions of turnover, your turnover down 25% in Q2. To my mind, it's so simple that you shouldn't need your accountant to claim on your behalf. But in practice, work kind of a little bit differently. In fairness to the accountants, if you expect your accountant, he or she, to claim for you, expect a small charge, because while it might only take 20 minutes, half an hour to do it, if 100 people rock up, that's causing problems at our end. There was another little item there. Since late March, local authorities were offering a deferral of 3 months on this year's 2020 rates. A little bit like the same way the banks giving you 3 months forbearance. That bit has kind of gone to ground. Number one, it was only a deferral. I believe that in our own county, you cannot claim that now if you since 31st March. Sorry, since 31st May. But it was there, but no point telling you about it now, I suppose. I'll move on then to revenue. And the debt warehousing. So the world is truly upside down when you have a wage subsidy scheme whereby you run your payroll and revenue put money into your bank account rather than vice versa. You also have in this debt warehousing, the world is upside down. The way we would see things is that your dealings with revenue on an ongoing basis, you send in information and you send in money. Revenue is basically like a great big computer for the acceptance of information and the acceptance of money. So they're asking you to continue sending information, but hold on to your cash. So it applies to VAT and payroll taxes. It applies to VAT for the 3 VAT periods, January, February, March, April, and May, June of this year. And it applies to payroll taxes for the months of February to June. So the expectation is that you would file your returns in the normal way, but that you would not pay them. This is not a gift, this is a loan, this is not free money. So the question is, when do you pay them? And by understanding that you start paying this build-up of tax debt 1 year after you reopen. I think it's also the case that in the absence of a properly constituted bureaucracy, this hasn't been properly legislated for yet, but it's operational. And the question, is there an interest cost on this? Normally, if you don't pay your tax, there's a 10% per annum on these kind of taxes. In this instance, because the world has turned upside down, there is no interest cost for that first year. And then when you do tackle paying it thereafter, there's a 3% per annum rate of interest. So the idea is that you would hold back on paying your taxes, hold on to your cash. You probably need it to get your business up and going again. But obviously, don't take out the spare money and take it out to Paddy Powers. My advice, be aware of the extent of the taxes you're holding back. Thankfully, your tax clearance is not affected. So you send in your returns, don't pay them in respect of those specific periods, and you don't have to pay them until this time next year if you're reopened now, and your tax clearance is not affected.
Sorry, Tony, just Brian here for a second.
Yes.
I know we had one or two bits of interference there on the microphone, so apologies on that. I just said I'd check with you there just in case there's no mobiles or anything too near it. But apologies to anybody for any of the interference, and we'll just try and keep an eye on it.
Okay, Brian, you weren't hearing me perfectly. Is that the case?
Yeah, there was some bits of it. It was just getting crackly, so I'm not sure. I know somebody just mentioned it there as well, so.
Okay.
But we'll keep an eye on it there anyway. Just sort of check in case there was any mobiles or something interfering or affecting the mic. So sorry for the interruption. And
do I need to go back on any of that, Brian?
If there's anything in particular that anybody wants us to go back on, I'll ask them to let us know. They can comment their way. So, but we'll keep going, and we can go back then if anybody wants to on particular areas.
Okay. And in the space of this tax warehousing, it applies to SMEs. So what's an SME for this purpose? It's a business with a turnover of less than 3 million, and it's a business that is dealt with by revenue other than in their large cases division. I talk for a moment about other supports. They're available through your LEO, your local enterprise office. There was a thing called a business continuity voucher, whereby you could fund consultancy costs up to amount of $2,500. The fund that funded that is now exhausted. So unless it comes back, that one is not alive at the moment. Just keep an eye on it. The next I'm going to talk about in a second, trading online voucher, that fund also got exhausted, but they refunded. So the trading online voucher is available. That's something that is not new. That has been around for a number of years. So you can apply to your local enterprise office for a grant to basically to get your business online, whether that be money spent with your web designer, money spent in that whole space to assist you to get your business online. Typically it's money that you will spend on designated outside consultants or service providers. I'll talk for a moment about loans. At the low end, and I think to qualify for this loan of up to €50,000, you'd have to be financially fairly weak, which coming out of this, lots of us might well be. And by that, I mean kind of just not very bankable under normal banking conditions. So there is available via Microfinance Ireland or via, again, our friends in Leo, a loan of up to €50,000 called a micro enterprise loan. So you can put your hand out for this if you don't find it easy to get lending from your bank. If you are a company with less than 10 employees and turnover of less than 2 million. If you get this money, it has a 3-year term and the interest rate is 5.5% if directly through Microfinance Ireland, or 4.5% if through Leo. Again, it's an online application form. I would say more so certainly than the refund of rates one. You will or would need your accountant to hold your hand through this one. And if you came to me and wanted our time to hold your hand, I'd prefer to see you looking for towards the 50,000 rather than the 10,000 amount, because I find that it's a fair bit of work in getting the loan. There would be disproportionate effort in getting a loan of 5,000. At the heftier end, there's a loan which is called a COVID-19 Working Capital Scheme, where the loans are much more substantial, from as little as 25,000 up to 1.5 million. If you get such a loan, it's at a rate of 4% and it's for a period of up to 3 years. It's to fund working capital and or to mitigate COVID-19 issues. Again, there'll be lots of businesses who, having gotten through the last few months, may well have spent their cash on paying creditors, on paying wages, and maybe out of cash and will need cash and perhaps significant cash to get going again. So this would be a good place to get funding to get going again. It's an SBCI product. That's the Strategic Banking Corporation. So in order to get this funding, you would first, again, go online to SBCI, apply for, get their sanction, and armed with, like, they sit in a sense on top of the banks. So armed with their sanction, you'd walk into your local AIB or Bank of Ireland or Ulster and say, I now want my working capital scheme loan of 50,000, 100,000, 200,000. And while you don't really need to know what goes on under the bonnet, but the SBCI backing secures it, or secures big chunks of it from the bank's perspective. So it enables the banks to lash out the money without worrying too much about the security aspects. I think those are the things I wanted to talk to you about. I'll now invite in my business partner, James, to talk about some more industry-specific supports. That should be your one. Yeah.
Okay, thanks, Tony, and good afternoon, everybody. I hope you can hear me loud and clear. So I'd just like to briefly kick off with, firstly, before we even look at the supports, just briefly kick off and look at kind of a proper cash flow management. What should all businesses be looking at this moment in time as a result of COVID-19? What's exceptional that they need to take action upon? So in the action plan I've listed here, these are some of the basics that I think everybody would be recommended to do. So look at your variable costs. Take out your financial statements, your trial balance, sit down with your bookkeeper, sit down with your financial controller, your accountant, and go down the income and expenditure account, the profit and loss account, line item by line item, and look for your variable costs. They're the costs that you have control over. They're not the fixed costs. They're the costs that vary with activity, vary with the amount of sales that you have. And see, is there scope for savings in those variable costs? That's step one. Critically analyze that. Step two, discretionary spend. If there's going to be any discretionary spend, have a look at it. See, can you delay it? Can you kick the can down the road on that spend? Is it reinvestment in motor vehicles? Is it something along those lines that you can say, yeah, we can get another year out of that van, we can get another year out of that tractor, we can get another couple of years out of that machine? So typically, you're probably looking at capital expenditure there. And can you kick it down the road and save cash flow in that respect? Extend your payables. You'd be amazed at how many businesses don't know the exact credit terms that they have with their suppliers, with people that they get credit from. And whatever that is, max it out. So if you get 60 days payment, take 60 days. If you get 60 days, maybe pick up the phone and ask and see, can you get 90 days? So extend your payables, see, can you get extended credit? Your suppliers might be in a financially better position than you are. You've supported them down through the years by buying from them. This time for maybe a little bit of payback. So max out your credit, and as I say, engage with them and see, can you get extended credit? Expedite your receivables. The opposite. If people owe you money, try and get it in as soon as possible. Easier said than done maybe in today's environment, but engage with your debtors, see, can you get payment in, offer discounts, maybe look at going to some of the finance houses, look at discounting your debtors, look at financing your debtors. They're all things that we can assist our clients on, or if anybody has any questions, we've experience in that type of thing, so no problem with that and helping out people. There's new financing arrangements out there now called supply chain financing, and it's kind of fresh and new, but it's something you need to discuss with your banks. And it's where both parties need to agree with this, both the purchaser and the supplier. But in effect, in shorthand, the bank would settle with the supplier almost immediately at a discounted rate. So if you owed 100k to your supplier, the bank would pay them, say, 93. So there's a 7,000 discount. The supplier is happy to get the 93, and the bank would then in turn give an extended credit over and above what the normal credit terms were to me. So if I was expected to pay the 100,000 in 30 days, the bank might give me extended credit of, say, 60 or 90 days. So, and the bank win in the difference in the margin of it when I eventually settle with my 100 to them 3 months later rather than 1 month later. So it's something that's kind of new, it's something different. So again, it's something to be looked at and discussed with your banks perhaps. I have in there listed renegotiate rental lease agreements. It's easier said than done, but it seems to be one of the very first things that people talk about in an economic or financial crisis. Can you pick up the phone and talk to the landlord and see, can you negotiate rent? Can you look for a rent holiday? Can you look for an abatement in some shape or form? And yes, it's worth that conversation. Speak to your landlord. Your landlord needs you often as much as you need him. So definitely pick up the phone, have that conversation again, and see, can you get some kind of an agreement and a deferral mechanism on your rent. And then, of course, Tony has mentioned in detail about the revenue commissioners and the deferral mechanisms that they have in place at the moment, the deferral scheme. Look at that without a shadow of a doubt. Definitely look at it. Tony mentioned about tax clearance, that you're not affected if you're participating in the scheme with tax clearance. I just add to that to say that even if you're not in the scheme, and at the moment, if you're offside with revenue, and the automatic tax clearance application form rejects your application, use my inquiry, get a request in, explain your circumstances to revenue. They are very open to issuing tax clearance certs at the moment, even though you could be very much offside otherwise as regards your liabilities. And we have experience of that as well. Just finishing off on cash flow, I would say and recommend people to look at their insurance cover. So step one, are you one of the fortunates that has a policy which has business interruption or temporary business closure coverage which pays out on COVID-19? There seems to be very few at the moment that we're here of. There's a small few, I think, AXA policies that are paying out, but it looks like the insurance companies are fighting that corner. You can go to your broker to discuss. You can go to a loss adjuster that might do a no fault, no fee review of your insurance to see, can they argue a claim on your behalf. But definitely worth looking. Take out your policy. There's reams of pages in it. Give it to an expert, especially if it's no fault, no fee. See if there's a claim there that can be made if you have had a business interruption or you've been closed for a period of time, and try and get some loss of profits cover back. And then finally, on insurance cover, I suggest that you should look at your insurance policy and see what you're covered for. In light of the downturn in the economy, you're going to have reduced property values, you're going to have reduced possibly wage costs, you're going to have reduced activity, maybe partial closure of some parts of the business. Go back and review your insurance cover, so that perhaps you will get, or hopefully get, a reduction in your insurance premium. So all that should be good stuff to help on cash flow. Some of the other supports then that Tony didn't touch on, and I suppose they're a little bit more nuanced, a little bit more specialised. There's a credit guarantee scheme that's out there, and there always has been an element of credit guarantee provided by the state. Not so much when times were good, but when times go bad, the state step in. And here we have a special 2 billion COVID-19 credit guarantee scheme. So the nature of this and the purpose of all credit guarantee schemes is that where an SME is going for lending and they're having difficulty to convince the lender to give them funding because of their financial circumstances, the government steps in and guarantees against the bank's losses. And in this instance, it's an 80% guarantee. So the state will step in and say to the bank, we cover this loan for 80% of its value. And it's attributable to loans of between 10,000 and $1 million for periods up to 6 years. But it's the purpose of the funding is primarily and solely for the business to bring changes to their activities in response to COVID-19. If you're an Enterprise Ireland client, EI have specific supports for those clients. So there is a new 180 million sustaining enterprise fund, and that is available to, as I say, all EI clients, and they can apply for an amount of up to 800,000. And they call it a repayable advance, but really it's an interest-free loan then, really, in layman's language. You must have exhausted the previous SBCI banking options. So what Tony was talking about, the other COVID-19 lending facilities are there that are SBCI backed. You must have exhausted that. You must have failed that process before you can go for this funding. And again, the funding is specifically to help you deal with COVID-19 related effects on your business. Other EI supports, there's a €5,000 business financial planning grant. So that's so that you can, it's very similar to the Leo continuity voucher, only it's 5K instead of 2.5. You typically engage an outside consultant to assist you in putting together a financial plan to ensure the continuation of the business. There is a 200 million COVID products scheme. That's specifically of interest to manufacturers. So if you're a business that's already in the game of manufacturing medical devices or the PEP, you could tap into that fund to expand what you're doing. Or if you're a business that's not in that game but is planning to go into that world, you can look for funding for R&D, so to develop new products, so COVID-19 related products. So that might be interesting to some people at the moment, particularly if you're looking at diversifying. And then EI have had for a number of years the lean funding, and lean is a program that's there for businesses where they would typically get an outside lean expert, outside consultant to come in and do a root and branch review of the business to eliminate wastage in a business and identify improvement in processes and obviously bring in profitability, increase profitability then. And that funding is still there for consultancy and training, and it's more relevant than ever, I would say now. Your typical conditions for all those supports is that it's number one, to be an EI customer or client, but typical EI client is a company that employs more than 10 full-time employees and is operating in manufacturing and internationally traded services. There's a formal application online again for all of these supports, and you just have to go onto the EI website to find them. Even more specific to certain industries, Bord Bia, they're offering a full suite of supports for the food and drinks industry. So if you're in that world, check out the Bord Bia website, and it goes without saying that really this is the websites that you need to tap into for all of these supports. Bord Bia Shivara, BIM, again offering support for the seafood sector. Fáilte Ireland supports again for what they call urgent challenges facing tourism businesses, and the tourism world has been severely affected, that's for sure. So anybody in that world again should tap into the Fáilte Ireland resources on their website. For artists, the Department of Culture, Heritage and Gaeltacht has created a package of supports there for the cultural sector. There's been lots of cancellations of specific events, small scale events locally, larger events. So the government is well aware of that, and artists, they're very limited on options as regards alternative income. So that's an important one if you're in that game. And Teagasc also has set up a support and guide mechanism there for the farming community. It's probably a little bit more practical, their guide. It's dealing with on-farm issues and things like that. So how do you deal with basics like the milking parlour with a number of people in there? How do you comply with health and safety and social distancing requirements? How do you deal with the vet when he comes on the farm? The guides are there, so go to the Teagasc website and you'll see that. The company's registration office just down the road from us here, they've extended filing dates for all companies as regards their annual return. So if you have an annual return that's due to be filed at this moment in time, they recognise the limitations that are being put on businesses. So those annual returns don't have to be filed until the 31st of October 2020. So you won't be late if you hold on to your return, or if you have an ability to send in your return until that date. And the Register of Friendly Societies has extended their date to the 31st of December 2020. So 2 extensions there that are practical and useful. Other supports, I suppose, really around reopening. The Health and Safety Authority is really, I suppose, been appointed the lead agency, and it kind of makes sense. So they published on the 9th of May the National Return to Work safety protocol. And that's available, I think it's at 60 odd pages, available for download from the HSA website. And it sets out very clear terms what the duties of employers and the duties of the employees and what steps need to be taken before the workplace can reopen and as it continues to operate. And it's highly recommended that every employer reads that and takes direction from that, and then that the employer would tailor their own specific protocols for their own workplace and comply with all those regulations to ensure the health and safety of their staff and customers and clients. They also have COVID-19 templates and checklists that are very useful to download again, and you can use those as a prompt for the business owner or manager to ensure that the business is safely opened and running. The National Standards Authority of Ireland, they've compiled a number of also useful guidelines. The most important one there and the most detailed is for the retail sector. Retail sector is having its challenges, so it's very useful to have that guide there. It helps the retailers manage the business during COVID-19, and there's some very good and useful information in that, so I'd really recommend that to anyone in the retail community. They have a standards guide there on PPE and medical devices, so anybody who's gearing up and inquiring that in their business, if you want to ensure that what you're buying is of sufficient standard, go onto the NSAI website. It'll give you confidence that what you're buying matches their standards and ensures quality for your staff and customers. There is also a PPE and medical devices guide for anyone who's manufacturing or importing such PPE equipment to ensure that the compliance is there at their level from a manufacturer and importer's point of view. So again, very useful if you're in that game already, or if you're thinking about getting into that game, if it's a new business venture, go and look at that guide and see what you need to do. Check your suppliers, ensure that the quality of what you're buying, wherever it's coming from, China or wherever, is of that standard. No point in bringing in something that is not of standards, as we found out to our detriment, as lots of countries did during the crisis. And they also have a guide on workplace protection and improvement for preventative measures for businesses so they can ensure to hold and the spread of COVID-19 in their workplace. So kind of rattle through that. Hope it was of some use. I suppose the final message maybe is the most important. Stay safe and stay well. Thank you very much for your time. And we'll hand you back to Brian if there's any questions. Thank you.
Thanks very much, James, and thanks, Tony. If you've got any questions you'd like to add or any comments in relation to the webinar, just pop them in there now and we'll be able to deal with them. I do have one question there, Tony. I suppose any more details in commercial rates for impacted businesses? I suppose even from the chamber perspective, I'll just mention, I know we were talking to Pascal O'Donoghue last week and we raised this matter with him on the commercial rates waiver. I don't know if Tony has heard any more on it, but I believe that the councils are still waiting for details on what way measures are going to roll out on this. But because it is important to take it into for cash flow.
Yeah, I have no more answer than that, Brian. I already touched on the clawback of 2019 rates as the reopening grant, and I touched on the fact that we were offered, or many people were offered, a 3-month holiday on this year's rates, a deferral rather than a forgiveness, let's say.
Yeah.
And even that has gone to ground. So unless and until Pascal comes through with an announcement, there's nothing else on rates. Let's say I expect to have to pay my 2020 rates in full, either with the deferral or not, but that's the current situation.
No, well, that's fine. I know we'll keep, as a chamber, we'll keep driving it on anyway. We're trying to catch up with Minister for Housing and Local Government at the moment as well. We have a question there from Tom. If a worker gets COVID-19 when back at work, what financial supports are in place?
The correct answer is I don't know.
For the worker or for the
I presume the question is what supports are there for the business?
He just said what financial supports are in place. So there's probably the two. If they have COVID-19, I think they can, there's the workplace scheme anyway where they get the 350. So there's the payment there.
Well,
I don't know.
if the employee is sick at work, the employee should immediately prioritize their health, and there should be procedures, as I mentioned in the protocol. There is procedures as to how that should be dealt with in the workplace. There is a nominated employer representative, and the employee should make themselves known to the employer representative. If they're unwell, those procedures are followed, and in a nutshell, the employee should be sent home, and they should make contact with their own GP to see if what they're actually suffering is COVID. But that if the employer is already in the employer subsidy scheme, the fact that the employee has gone home, the employer will continue to receive the subsidy scheme or subsidy payment, for that employee. The employee does not have to be active and participating in the business. So the employer is still okay as long as the subsidy scheme is there. If for whatever reason the employee has to leave work, well, then the social welfare payment is what would be available to the employee, and there's no consequence or issue then as regards the employer in that instance.
If Brian, there's a kind of a nuance in the question, or that that this event causes a kerfuffle at work, like is there a compensation for that? And the answer is no.
Yeah, no, there's no kind of compensation, or there's nothing there announced anyway, support-wise, with regard to measures of for the business to deal with it. I suppose there's other elements that, would be dealt with in a separate seminar, HR related, on some issues that could arise following, all right, and we can look at those further. So I can give Tom a shout anyway on that further. I don't have any more questions coming in there yet. But if you do have any more questions, do drop them in there now and we'll be able to deal with them. But I suppose even for me for now, thanks very much to Tony Harney and to James Nolan. Very informative. Really appreciate you giving your time this afternoon and just putting all this together for us. So we'll have some more webinars. We'll be announcing them as time goes on as well. So I know we're looking at one for next week, and we should have more details on that. Details will be live on the Chamber website. So watch that space. But for now, thank you for taking the time, to everybody for joining us this afternoon. I hope you found it worthwhile. If you do want any more information, you've got contact details for James and Tony are on screen there. And we look forward to seeing you again soon. So thank you very much from all.
Thank you, Brian. Thank you for joining us. Thank you. Bye-bye.
You're welcome. Bye-bye.